Hi friends, Simit here from InformedTrades.com. Today's April 25th, 2014. Time for our daily trade review. Basically, in these sessions each day, I share the trades I'm placing, the adjustments to the existing positions that I put on in the market that I have, as well as any charts I think are interesting or worth sharing, worth learning from. The idea behind this, you can sort of learn from my successes and my mistakes. We can all sort of learn together. If any of the information I'm presenting is unfamiliar to you, check out InformedTrades.com, a huge archive of learning material, not only on my approach to trading, price action swing trading, but other styles of trading, other markets. Check it out. Share your knowledge. Ask questions. We can all learn together. Okay, the first chart I want to highlight today is a chart of gold, the daily chart of gold. A number of patterns on this chart. Something I had highlighted before was the AB equals CD pattern. So we have point A here, this swing low going back to the start of 2014, 1180, major support there. Then we had a swing high all the way up near 1400 in March 17th. Then we came back down, established support at 1280. That's our point C, 55% retracement from A to B. Now AB equals CD, we can project point D, which puts us at around 1450 by early June. That is the projection up here. It's kind of off the chart. Now, in order for that to be valid, we do need to ensure that point C is not breached. We did go below it a little bit, right? This low here is lower than point C, but we also see strong signs of support here. So we had a long wick candle off this, excuse me, off the support level. We have an inside bar here, bullish engulfing bar. I view this as a sign that bulls are stepping in to defend 1280, and so perhaps this pattern is still valid. In any event, I do think this is a good level to buy, and I'm in it for the long term, so I think it's going to go much, much higher. But even for short-term traders, I think there are opportunities to buy at 1280. Put your stop maybe somewhere around here, 1260 or so, and you can target a number of levels. From 1330. You can target resistance up here at 1392. All will give you a decent reward risk. Okay, that was the first chart I wanted to highlight. Now, in terms of the existing trades I have on, I've been in the same situation the whole week where I've got 6 trades on. 2 are at break even, and 4 have risk exposure, which is sort of my maximum risk exposure. I don't want, if all my stops get hit, I don't want to lose more than 1/4%, or excuse me, more than 1% of my account balance. So I'm risking generally 1/4% per trade and not letting more than 4 trades on until I can move 1 to break even. Okay, so let's take a look. Canada Swiss. Okay, here is here is Canada Swiss. I entered at this black line, stop is at this red line. Still have the 50 simple moving average here and the and a 50% Fibonacci retracement from this swing low to this swing high. So I think we've been in this trading range the whole week. It's just a matter of waiting. If we can get to this orange line, this level I'm watching, or this red line, which would be the negative outcome of my stop being hit. So it's slightly in the money. Nothing really yet to do. That's Canada Swiss, Euro Aussie. Okay. Excuse me. Price did stall a little bit, so and this is sort of a resistance level. I'm a little tempted to move the break even, but I still think it'd be premature. I could still see price falling all the way back here, and I would still be interested in buying if it did. So this is another example of just waiting. The orange line, I like to, when I put on a trade, here's there are 3 levels I'm gonna, or 4 lines really on the chart. One, the black line is the entry. The red is the stop loss. The dashed orange is when I will, if price closes at or above this level, that's when I move to break even. And the green is the target profit that I ultimately want to hold at least some of it onto for the long run. Okay, so that's, we look at Canada Swiss so far and Euro Aussie. Next on the list, let me just pull up my account here. Euro Yen. And we have seen the yen rally a little bit over the past couple days. So I entered this black line back here. here is where my break-even level is. Basically I'll put the break-even level at a resistance level, at a minor resistance level. So uh, it often occurs where price will stall at that level. Now I want to see price close at or above. So here we touched that level, but we didn't close. The price came back down. However, we still have the 50 simple moving average here. And the basic measure is, if price comes back here, I'm still be interested in buying. So we'll see. This is just another case of waiting. That's euro yen. Pound yen is a little bit better because my stop is already at break even. Right, I entered way back here. My stop is at break even. I moved my stop to break even when we closed right here. So it didn't take long to close at my above the dashed orange line at the break even level. Moved my stop to break even, and I took half off when we were here. So we're still at that level. I still think this is a nice setup. If in any event, this trade has been de-risked, so it's less concern. Another trade that has been de-risked is pound kiwi. I took my stop is at break even, and I also took half off when the price started stalling here. Price ran the 50 simple moving average and 200 exponential moving average, and we had a long wick shooting star. So I thought there were a number of signs of a potential reversal. I took half off. Now it looks like we're clearing above. This is a nice price action, in my opinion. I think today's candle especially, is to me sort of signaling that the market is finding the 50 simple moving average and the 200 exponential moving average as support. So it's a case of resistance becoming support. That's at least what I'm hoping. Although the trade hasn't de-risked, so I'm not going to lose any money on this. But I would like to see it go up here. This is the target profit I'll be holding on to. Okay, the last trade I have on is dollar yen. Okay, so I entered here. This position's still in the money. Let's see if this trend line, this dashed red line, thin red line, is supported or maintained support. Right now my stop is here. My target profit is way off. With the yen, I'm looking 2,000 pip gains. So I just want to move to break even. And that way I have that capital tied up or freed. Excuse me. Right now I'm not putting on additional trades because I don't want to take on additional risk. So once I can move to break even, then I have that capital. I can look for other trade opportunities. A little bit of a boring week for me, in that I've had these positions on. I've been at full risk capacity, so there's nothing else I can really do. That's fine. Sometimes to me trading is boring, and the one thing is, in hindsight, I think there was one pair where maybe it was Canada Swiss, I think. Sometimes if you time your entry a little better, no, that's not it. It was Euro Aussie. I guess in all instances, if you time your entry perfectly, then you can minimize the amount of time. Yeah, here we go. So I've been in this trade for a while. I entered like right around here, April 7th, and then it came all the way down here, almost at my stop. Now it's back above my entry. It's got the 200 exponential moving average. So ideally, I would have entered, a week later. And the more correctly you time your entry, the less time it'll take for you to move to break even. So, of course, that's it's hard to put on a perfect trade. So, in any event, even though it was a little bit of a boring week, I'm not trading for excitement. I'm trading for making money. Or the goal is to actually trading. Good trading is boring. It's something Stephen Primo has said, and I have an interview with him. If you check out on our Informed Trades YouTube channel, also on InformedTrades.com. In any event, we'll see next week. Maybe some positions will move to break even, or my stops will get hit, and there'll be some other orders we can put on. Till then, it's just a matter of sitting tight. Hope your trading is going well. If you have any questions, any knowledge you want to share, join us at InformedTrades.com. Have a great weekend, and we will see you next week. Take care.